You wouldn't know it by looking at the spot price of gold, but there has been a massive shakeup in the gold market because of new and unexpected tariffs on gold. Let's talk about it in this video as we explore. This news came in very late yesterday afternoon, and the market really did not have much time to react to this news, but there has been an unexpected tariff on gold in Switzerland. I'm going to be referencing an article here that talks about that, but before I get in too deep with that, I want to remind you of channel sponsor Summit Metals. We've got great customer service and excellent fast shipping. So what's going on here? Well, there is a massive increase in the gold futures price. The gold futures price is skyrocketing right now, but the spot price is staying right around the same price as it was yesterday. In fact, it's only up 30 cents on the day. So this kind of reminds me of what happened with the copper market, where the futures exploded in price, but the spot price did not move all that much. But remember, a lot of dealers out there, they price with a hybrid model of spot and also the futures market. So likely, probably you're going to be paying more for gold. Now, this news came by, and it was very hard to get information on it because a lot of stories were being reported on behind a paywall. So I didn't report on it yesterday because, well, I kind of wanted to just wait and see if there's any other news about it to see if it was real or not, number one. And number two, I wanted to see what kind of impact it was going to have on the price. Well, we now see that as gold futures have jumped now to near record highs after U.S. tariffs on not just any and all gold, but on particular bars of gold. That's right, cast bars. I'm going to get into it here in a little bit, which means that this may blow over a little bit, but I think it's going to take a while because it's a pretty big chunk of the market that comes out of Switzerland. The imposition of 39% import rate described as another blow to Switzerland's world-leading refining industry now has been affected by this, according to this piece from The Guardian from Lisa O'Carroll. The price of gold futures have soared to a record high, or near it, after it emerged that the United States would put tariffs on imports of 1 kilogram bars in a further trade blow to Switzerland, which dominates the world's refining industry. Indeed, it does. How much of that gold comes into the U.S.? And when you think about it, this is a 100-gram Credit Suisse Pant bar, which I believe is refined and cast in Switzerland. This is a tenth of the size of the bars that are sent in through. So that makes you wonder what if a lot of these are going to start to flood into the market in the United States to avoid tariffs, because it's 1 kilogram and 100-ounce size bars that are going to be affected by this. So that's going to be something that's very interesting to see. And why is it not related to all gold and not in just these really contract size bars? Swiss exports to the United States were hit by a crippling 39% tariff that was announced on Thursday after the country's president returned empty-handed from a last-minute dash to Washington in an attempt to get the rate among the highest imposed by Donald Trump lowered. It later emerged that U.S. Customs had decided that certain imports of gold bars that had been in tariff-exempt category should also be covered by this 39% rate. Because remember, on April the 2nd, it was announced that bullion would be exempt. All bullion would be exempt. That's gold and silver, and platinum as well, and palladium would be exempt from tariffs. Well, this has been included, and it just goes to show you that there's still a lot of unknowns and uncertainty out there with regards to tariffs. And now another front in the geopolitical concerns that we're seeing around the world. And so it has emerged that United States Customs will now recognize these types of gold bars as being covered under the tariffs, the 39% rate. The detail was revealed in a ruling letter used by the United States to clarify its trade policy, which was signed on the 31st of July and sent in response to a law firm's request for clarification on the classification of gold for a New York precious metals trader and financier. U.S. Customs and Borders Protection wrote back that 1 kilogram and 100-ounce cast bars were not exempt from tariffs, adding both types of bars are used primarily to back contracts on the commodity exchange on the COMEX, but are also sold to jewelers or industrial consumers for manufacturing purposes. So, and the thing is that these bars for industrial manufacturing purposes, given that rate, they're just going to get these 100-gram bars or 250-gram or 500-gram bars. They can get those as well too and avoid those tariffs. So I don't think the manufacturing and industrial sectors will be affected by this that much. Sales of gold from Switzerland to the United States shot up in the first quarter of 2025 as investors sought refuge as a safe investment amid the uncertainty caused by the Trump's threat of tariffs. So this means that this very well could, in a sense, blow over because a lot of gold has come over to the United States, but some of it was shipped back, but that was mainly through the LBMA. And I'm not sure that was necessarily coming directly from Swiss refineries such as Credit Suisse and the like, but it could be. And who knows? I think they probably should have kept some of that gold here in the COMEX in order to protect themselves, because here we are now, months later, and look at what's happened. The Swiss Precious Metals Association suggested this trend may have contributed to Trump's decision to slap a blanket 39% tariff on imports from Switzerland for everything, and that includes these bars. Now, the association acknowledged the short-term impact that gold has had on the trade balance at the beginning of 2025, which was an exceptional situation created by the reaction of the U.S. markets to uncertainty around upcoming tariffs and the global geopolitical situation. It said the imposition of tariffs on gold cast products makes it economically unviable to export them to the U.S. And that is, again, understanding that it is just the 1 kilo to the 100-ounce cast bar size. But again, gold is very expensive now and was before this announcement came. In fact, the spot price, again, as I reiterate, has not changed that much. It's only up 0.04%. The precious metal markets is pretty calm here today and midday here as I cover this topic. But nonetheless, this is quite something else, and I think it's going to mean that we're going to see some uncertainty and continued uncertainty, because if this can happen with 1 kilo and 100-ounce cast bars, well, who knows what could happen down the road. They may expand it. Its president, Christopher Wild, said, "We are particularly concerned about the implications of the tariffs for the gold industry and the physical exchange of gold with the United States, a long-standing and historic partner for Switzerland." And record bullion exports of more than $36 billion worth made up more than two-thirds of Switzerland's trade surplus with the U.S. in their first quarter, according to Swiss Customs data. The price of U.S. gold futures hit a near all-time, well, actually, they're saying here that it was an intraday high of $3,534 before scaling back a bit now. In fact, right now, I'm looking at the gold futures price. It is sitting at $3,487.70. And in all honesty, the futures market right now is only up to $37.40 a day. That's a 1% climb. So not all that much. But I look earlier, and there's a chart here that shows this thing, and it did get touched 3,500. In fact, I can see where it reached over 3,500, which certainly would be that all-time high there. So very interesting indeed. And so with about 70% of the world market, Switzerland dominates the trade of turning gold from mines and other sources into gold bars. They're the top refiner. Makes sense. It imports about 2,000 tons of gold annually, which fit in from intermediary banks from London, New York, and elsewhere, which are later exported as gold, is seen as a safe haven investment in a time of financial uncertainty. In the last 12 months to June, Swiss exports of gold to the United States were worth about $61.5 billion, And now this now faces an extra levy of 39%. So this is a big deal. Switzerland's rate is among the highest in the world after Brazil, Syria, Laos, and Myanmar. According to reports, gold bars were in such demand in the United States in May after Trump's announcement of sweeping reciprocal tariffs the previous month that Costco capped how many gold bars could be bought in the day. And that's right, they sure could. Yes, indeed. And this is something else for sure to see this information. And of course, Kitco is also reporting on this, about these tariffs, about this letter that has been sent. Now, my guess is probably knowing what's going on here and having an understanding of what the ramifications could be long term. My guess is probably they may reverse that. I'm predicting that Trump may reverse this policy. Because I'm telling you what, especially if there's going to be some sort of shift to a gold revaluation or what have you down the road, we don't want to, I don't know, but maybe it's purposeful. I don't know. But my guess is probably, well, it's hard to say. I'd like to think that they may take off that or make an exemption for that, but that is a big part of Switzerland's economy. And this will be hopefully negotiated down. We'll see. I don't know what the reason for this tariff rate on Switzerland is, but my guess is probably the negotiations obviously did not help, and maybe they'll come back to the table and it'll come down and maybe be removed from gold in the coming maybe days or weeks out. We'll see. And maybe the negotiator called Trump's bluff, which you never do, because whenever Trump negotiates, he's willing to do it. He's willing to put on extreme tariffs as far as negotiation. So we'll see how this plays out. But nonetheless, the gold futures market is reacting. It certainly is. And right now, as I report, right literally, gold has gone down now 20 cents. It's down in the spot price, still just under $4,000 an ounce, which is quite something else to see gold flirt again with these prices. It's a lot of uncertainty out there. We'll see how it plays out. Let me know what your thoughts are about this situation, what you think is going to happen with gold. And in the meantime, I'm glad I got it. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.